Eos Energy Enterprises, EOSE, founded in 2008, came public via a SPAC in November 2020, and actually it opened up at $15 a share and closed at over $20 at the time, as energy and storage devices was all the rage back in that era. Fast forward a few years now, Eos Energy has had a pretty good year. It's up 500% over the past year. It's seen a trading range of 61 cents all the way up to $6.47. So at the present range of about $5.70, it's come off just a little bit. However, when you look at it since the IPO, it's down considerably, which always piques our interest in looking at the opportunity for it here. So really, utility scale energy storage is the mantra of Eos Energy Enterprises, and they've got some big products focused on utilities, large commercial industrial customers, and of course renewable energy companies as well. Who's using their systems? These are heavy duty, large systems, and they've really got a manufacturing ramp up planned for the rest of this year. They have brought their manufacturing back from China in recent years, so they have one large scale manufacturing facility and another one in the works. Here's the intriguing component of that is that they also have received a U.S. Department of Energy guaranteed loan for approximately $300 million. So that kind of underscores that the technology, this zinc-based long duration energy storage system, is pretty sound, and the orders are coming in quite vigorously as well. Total marketable pipeline, I'll call it, at about $14 billion, and quite a few lists of customers that are ordering up and ready to go. So a lot of opportunity here. Energy storage is a hot market at this point in time, and with a market cap of $1.25 billion, Eos appears to be primed and ready to go in the space. Let's take a little bit closer look at some of the market fundamentals and see how they line up. So again, with a market cap of about $1.25 billion, small cap company, which equals large opportunity for us investors, and a price per share of about $5.70, there's a lot of room to run, especially when you consider where this IPO'd at just a few years ago and touched $20 a share in those opening days. So what does the liquidity look like for this company, Eos? Well, when you consider that they have a U.S. Department of Energy backed $300 million loan guarantee, that takes some of the questions off the table. And they also have a term loan that they can tap from Cerebus, so a big investment house, which has given them terms of a term loan that they can access to build out and increase the business as well. So that's showing you there's a lot of faith in this business. So liquidity doesn't appear to be a problem for Eos. Think about the revenue. Now they projected revenue at about $15 million for 2024. However, they've gone on record saying that with all the orders that are tumbling in the manufacturing that is ramped up and is going to continue to ramp up, they're looking at revenue of between 150 and 190 million in 2025 alone. So that is at least a 10x for the revenue increase during the course of this year, 2025. So this should have all of our attention. And with the stock price languishing in the $5 range, it appears to be that there's some opportunity for the rest of us to capitalize on this. Interestingly, when you do take a look at where the analysts are pegging this company to be at, they're giving a range of $3 to $6 a share. It doesn't quite make sense, given that revenue is going to surge tremendously, and they're looking to attain profitability as soon as they can as well. My guess is that there's a bit of a wait and see here. Eos has not quite lived up to some of the hype and some of the promises in recent years, but this year appears to be where all things come together. It's enough where I've established a small stake in Eos Energy, and I'll continue to look at increasing this as I analyze the company more and look at opportunities and news as it comes out. But when you look at the revenue growth that's on its way, the pipeline of product ready to be shipped out, guaranteed loans backed by some heavy government and then private equity type players, Eos Energy looks to have the products that the market is looking for, and energy storage is going to be a hot item, especially industrial grade, utility grade energy storage. This should be a company worth watching and worth investing in. I'm in, and let me know what you think, what you're doing. I think that this could easily hit $12 to $15 a share in the course of the next year. If things hit the way we expect them to hit, I'm looking forward to seeing what happens. So we'll keep on top of this one and hope this helps you out.